You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike Tosaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Henry the Flowmaster Schwartz from Cboe. The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back. It is Thursday. It is noon Central. It is 1 p.m. in the Eastern time zone. Do you know what's popping off in the world of volatility and indeed in the old options market? Let's find out together, shall we? It is time for the bi-weekly options extravaganza, known around the globe as the Option Block. My name, of course, Mark Longo from theoptionsinsider.com. as well as from the network upon which all you folks are mainlining these days. Hope you're having a good trading week. Pretty crazy one. A lot of stuff popping off this week, as it seems every week is these days. Gone are the days of, just sell in May, come back in September, and you're pretty much good. If you do that, you're missing out on a whole heck of a lot of action in between, and we'll break it all down today. Of course, if you want to break down even more content, you want to join us for awesome pro Q&As like we had again this week. Our buddy Steve Sosnick doing double duty, just came on VolViews a little while ago, and now answering your questions. People love the pro. They love to come on the pro Q&A hot seat. So be a part of the action, be a part of the fun. Of course, Options Oddities, the end of the week. A whole bunch of other stuff hitting there. A lot of early exclusives coming at you over there on the pro as well, including a whole bunch of stuff this week. So it's a really, really busy time on the pro this week in terms of a lot of early content. So get on over there, theoptionsinsider.com/pro. You also get your name in the hat. Fun bonus for the pro trading crate. We give away one of those every month. So you want to win one of those, trust me. Theoptionsinsider.com/pro is the place to go as we go around the horn and see who's joining us on the program today. First, let's go out to the quiet, the tranquil hamlet known as St. Charles, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, welcome back to the old OB, sir.
Always a pleasure to be here on the old OB.
Ooh, sounds like you're having a nice whiskey on the rocks or something there.
That's not me.
Oh, okay. Somebody's having a nice refreshing beverage as we go around the horn. To the shores of Maine. Oh, that completely derailed me. Where we are joined once again by the rockingest of lobsters. Maybe he's having a good whiskey on the rocks to kick off the show. It is 1 o'clock there after all, so it is technically in the afternoon, so maybe he can get away with it. Where we are joined once again by the rockingest of lobsters, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show. Is it you having the whiskey on the rocks to start the show, sir?
I would like to say that refreshing sound was me, but it is not. Although it is not dark, it is not stormy. It is almost, I dare I say, a summer day here in Maine.
All right, well, we've narrowed the suspects down. That means there can be only one. Joining us, it is Thursday. You might say, oh, it's the Flow Master. He's to blame. But no, he is away on assignment today, listeners. Joining us, holding down the Cboe hot seat this week, a returning offender. Last time he joined us was back on March 21st, so it's been almost exactly 3 months, as we are joined once again by Kevin Carter, a product manager over there at Cboe, and apparently a man who enjoys a good, refreshing beverage. Kevin, what are you putting away today? What's the beverage of choice?
Thanks. The beverage of choice is just ice water, honestly.
Sounded good.
With Charleston heating up here in the summertime, it's ice water time. So
sounded delicious, whatever it was. It made me thirsty as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, as I have a sip of my own ice water here to kick off the show, welcome, of course, to the Trading Block, the portion of the show we break down what the heck is trading out there. And as I mentioned, kind of an interesting week out there. Not many weeks where we have CPI and the Fed hitting us back to back on the same day. So a lot of people keeping their powder dry coming into yesterday. And of course, we saw commensurate action as a result. You know, it's interesting. Coming into the start of the year, a lot of this rally was on the back, of course, of AI and tech, but also the belief that the Fed was going to cut rates 3 times this year. Market was rallying. Here we are, halfway through the year now. No cuts materialized. A Fed comes out yesterday, says, yeah, only maybe 1 cut this year. And the market just takes it, bit in its teeth, rally ho out there. So fascinating. The bulls, at this point, they'll take any excuse to rally out there. But of course, CPI number was lower than expected, so that giving some fuel to the upside fire, coming off after the heels of a bad jobs number last week. So kind of a mix of data out there. PPI coming out today, kind of backing up the CPI number, looking a little bit lighter than expected out there, which again, inflation is the goal at the end of the day, and it seems like they're starting, at least hopefully, starting to come to grips with it out there. Fascinating stuff. You know, I don't have time very often. People think I'm out there slinging and running and gunning all day long, but I'm actually doing a lot of shows here on the network, listeners. I don't have time all the time to sink my teeth into minute by minute trading out there. Yesterday was kind of fun for me because it was a light day on the network, so I was able to actually sink my teeth into some of the pre and post Fed market moves. In particular, I know where a lot of you folks like to live these days is 0 day, so I got to really dive into those a little bit yesterday and really watch the pre and post announcement evolution out there. And it was fascinating to watch just how much juice was in these things heading into the announcement. I think at the time we were right around 54.31, I believe, in the S&P. I was looking at some downside puts. I believe they were the 53.65. So you're talking nearly 70 handle out of the money puts at that point. And they still had a healthy dollar bid going into the announcement. So they were pricing in a pretty high probability of a nearly 70 handle sell-off out there post-event. Of course, that all collapsed, went to a nickel offer almost immediately after the announcement. So a lot of premium went to die down there. Then worth noting, after we rallied initially, started coming back, and I was looking at the par puts, the 5,400 puts, and this is back when we were at about 54.5 or so. And there was still a $0.50 bid for those. They were still pricing in a pretty hefty chance of a turnaround blowing back through 5,400. Again, this is in the final roughly half hour of the day, listeners. So there's not a lot of time left and still a $0.50 bid for those things. And it ended up working out for those because they rallied to nearly $4, about 380 or so, as the S&P turned around, got down to maybe around 54.13 before the rebound kicked in again. So as they were threatening that 5,400 handle, that bid shot up. So even if you paid $0.50 for 50 handle out of the money puts with about 40 minutes to go in the day, you still could have made 3 or 4x if you were diligent on the trigger out there. And of course, you could also have let all that premium go to die if you paid, let's say, $3 or $4 for those, thinking you were going to break through 5,400. Just fascinating to watch all this evolution going on. Day of, again, when I used to trade SPX, listeners, expiration day was a day everyone wanted to get the hell out of the way of. It wasn't a day everyone flocked to. So the notion that everyone is now flocking to this, and the amount of juice we're seeing out there going up as a result is just fascinating to see. But let's go around the horn. Kevin, now that you are suitably refreshed, we will start with you, sir. What is catching your eye out there in a very topsy-turvy Fed and CPI-driven week, sir?
Honestly, every time I join you guys, I feel like I'm kind of saying the same things, but, it's another day that ends in Y. So NVIDIA is making, new highs again. The semi-space, Super Micro was another one that was kind of left for dead here, and that just rallied a quick $100. Apple, that's an amazing breakout for a giant company like that. That was a huge move. I don't know. From my standpoint, it still looks pretty healthy where, we're seeing the rotations of passing the torches, but the tech is still very strong. Commodities came off, gold has come off hard on the China news. But tech is still the place to be, and in big cap tech too. So story still plays on.
Yeah, the Apple move in particular, right, has been just, I think the technical term is bonkers. To see a Leviathan like that make that kind of move. We had said even going into the announcement, it seemed like Apple's notoriously a buy the rumor, sell the fact kind of name, and it seemed like that's exactly how it was going to play off again. They sold off coming out of that announcement initially. It seemed like the market was fading that. And then I think it was much later, maybe even the next session, where all of a sudden this massive turnaround kicked in. And here we are, Apple listeners, hitting 220 yesterday. So blowing 20 odd handles past their previous all-time high, which is around 199.20, I believe. So yeah, still hanging out 212, a little bit shy of 213. So giving some of that back today. But man, they just a crazy move. So again, they're trying to play catch up as everyone expected in the AI space. It seemed like initially the market kind of shrugged off what they were saying. They didn't really love it. And then all of a sudden, everyone woke up and said, wait a minute, Apple just said AI, and bam, off to the race. I've said it many times, every name out here, I don't care if you make barbecue sauce, if you make jeans, I don't care what you make, you should all be saying AI whenever you can, because there you go. Instant 20% pop in your stock. Fascinating stuff. Mr. Rock Lobster, we shall go to you next, sir. Oh, by the way, I've got so busy, I didn't even break down where we're kicking off the show here. Of course, most of the major indices were kind of red. We're kind of having a mixed bag right now. S&P struggling to get flat now, and it's slightly red, but looks like it's hanging out at unched. If past is prologue, they're going to rally hard again by the end of the session. We've already bounced off the lows. NASDAQ up about 0.1%. Dow, the laggard, once again off about 0.4%. And our old friend, small caps, feeling the heat today, off nearly 1.1%. All that a long way around to VIX when we kicked off the show at about 1235. Puts it down about 0.5 point. And VVIX at a 79, down about 1 point. All right, Mr. Rock Lobster, the table is set. Feast on whatever catches your eye.
I would say the Apple thing is impressive. I felt like, don't you think the surest trade in the last 10 years was you fade Apple into that worldwide developer conference?
Yeah, whatever the announcement is, Apple is buy the rumor, sell the fact almost every time.
I mean, and the only reason I didn't have a position is because I was a bit stubborn earlier. I thought Apple revenues are stuck. They got no AI strategy, blah, blah, blah. And I had some, I owned some put calendars. I had made a little money on them the first couple of days, and then Apple just started going up. I hedged, bought some calls, but I was too aggressive kind of selling calls because I think Apple was going to go down. And I'm like, you know what? It ain't going down. And I ended up closing the position for a loss, although I made a little bit of money on the calls, but still overall loss. I'm like, I'm just going to stay, I'm in the, okay, I screwed up. I was wrong. I'm staying away. Totally staying away from this. And I'm glad I did because it launched like $20. So I have a feeling that has a little bit of the squeezy in it. But when you look like, they're saying their phones are going to have some super AI cycle bull, I guess. But it's already, again, I guess you could say it already trades at a multiple. They have to sell a lot of phones, but whatever. It did rally, and now it's kind of sort of sitting here at this higher level. So I thought that was interesting. Another thing I thought that was interesting was NVIDIA is up 35% just before a pre-earnings price. I saw that and I was like, wow, okay. Stock splits still goes up. So it would have been like $92 split adjusted. And it's 128. I don't know. 8 and 28 is like, that's $36. That's like 30%, 33%. So I guess NVIDIA is going to become the first $4 trillion corporation because, it doesn't, every $10 now is 10x the original. So I guess there's no top for it. So we've seen this all before. I certainly won't. I have no interest in getting in the way of it. I don't own any NVIDIA just except through ETFs like the semiconductor index ETF, which is still like doing crazy. It's up like 3x or something from last year. So I ain't complaining about the ride in it. It's just I keep seeing on the internet like, okay, Cisco before, in a .com crash. But NVIDIA does have huge earnings, and they do keep kind of doubling revenue every year. So how long can it go? Who knows? So I think both of those things, it would be nice if the rest of the market participated a little more. The other thing I think that was relatively surprising is oil prices are kind of recovering, but all the oil stocks are at year lows again. Exxon, Apache, Chevron, all of them. So I think that makes a decent put writing strategy if you're kind of an income style human being, which I like to be on some portfolio, on like at least part of my stuff in one of the accounts. So, but Chevron's not at year lows, but it's basically almost 2024, last 3 months. Exxon, similar. So you have this again, you have the market where some of the tech stocks are sort of leading and the other ones are, and a lot of other stocks are kind of going nowhere fast. And just last thing, I thought I sort of slid under the radar. I guess the current administration is not touting, but it sounds like Saudi Arabia is going to leave the petrodollar, which I don't see how it's good for the U.S. The U.S. kind of seizing dollars, with the Russians and stuff, hasn't really done much to stop the Russians, but it's done a lot to get people out of the dollar. So we'll see how that goes. As some other countries diversify their holdings and see how that goes for treasury sales. So that's and we're very close to all-time highs in VIX is 12. So the market does not seem to care about any of these other issues because basically AI is winning and nothing else matters.
Nothing else matters indeed. Now we go out to the hinterlands of St. Charles. Mr. Uncle Mike, as an old school Apple guy, you must have been kind of even scratching your chin at that just hyperbolic move to the upside. If you have any thoughts on that, have at it. And then B, what else catching your eye on a topsy-turvy Fed week, sir?
Yeah, it's something else when we have all this interest rate news all at the same time like we do. Apple was very interesting in that after earnings, I remember us talking on the show how, well, I'm not sure if we can if it's going to have reason to go higher, but they're doing some buybacks, so that's going to help it. But we'll see how far that can go. And it just kept going higher. And then, of course, this week, it just went up like gangbusters all of a sudden. For our covered calls this month, we had 200 as our strike price with Apple. And I remember just in our conversation about it, as we were doing it, we were thinking in our monthly covered call meeting, it might be a little bit further out of the money, but let's just give it a shot. None of us really thought Apple would get to 200 by the end of this month. Well, obviously we were wrong. So Apple had different things in mind. Now I'm going to do a quick pseudo strategy block for a second here and just kind of go over what we did. I have one client. I was literally drawing up plans to think, okay, your Apple holding, and he's not in the covered call program, but I was thinking, okay, your Apple holding is getting a little bit too big. So over the course of the last year, we've been hedging it, selling some calls on it, buying some puts on it, just general things like that. And I was getting ready within the next few weeks to say, okay, if we can get a little bit of a run on Apple, let's just sell it. And so yesterday came, or I'm sorry, I should say Tuesday came, and I'm like, okay, well, I'm glad we're not selling Apple right now. And so how are we playing Apple in the time being? Do I think Apple's a good core holding to have? Yes, it is part of our covered call holdings. It's part of our, I think it's part of just about every one of our programs that we have. We do like Apple. It's a good stock, and it is what it is. But for some clients, I have it a little bit overweighted right now. And so this one client in particular, it's become a pretty big portion of his portfolio, bigger than I would like. Now, so when I saw it in the 2 teens yesterday, did I go ahead and sell it? No, I didn't. But what I did do is I made up my mind. I'm like, okay, the fact that when you have a stock that goes on Tuesday at 194 and Wednesday to 220, and the stock is as big of a behemoth as Apple is, it's not something that I really want to get out of. Because who knows, Apple is something to where it could go to 300 at this rate. You never know. But on the flip side, it could also go down to 160 at the drop of a hat as well. So what I did was, when Apple was in the high 2 teens yesterday, I just bought a 200 put option on it, and for this client. And the reason is that if it continues to go higher, I don't want to be the advisor that sold Apple at 220 or whatever, or at 215 or whatever it was when I bought the put options on it, and Apple ends up being at 280 or something along those lines. But on the flip side, I don't want to watch Apple go to 220 and then have it go down to 180 and be the advisor that held on too long. So I believe it cost me 98 cents to get into this put option for a month. And by doing that, we have the ability to hold on. And so with Apple giving the moves with which it had over the course of the last few days, is that something that is 98 cents something that really concerns me that much with Apple at this point in time? Absolutely not. So if Apple were to go back down to the 180, 170 level, or just all of a sudden have the wind come out of its sails, we're okay. But if it goes up to the 250, 260 level, or maybe the meme people will jump in on this one. I doubt it with a behemoth like Apple, of course, but you never know. We'll be in a good spot with that. So that's just a real life example of using options from the advisory side of things, and how I like to view things when we get into situations like this. Buy some puts. This one, Apple, it defies logic at going up this quickly, this fast, and the fact that it's this big, to me, that defies logic. So I'm not going to stand in the way for what that client was a good thing. But on the flip side, we got to have something in place to protect them, and we do. So that is what I am seeing.
Fascinating stuff out there. Buy yourself a month for nearly $1. That's not a bad do, I would say, at the end of the day. After that time, if we're still hanging out, is there ever a point, Uncle Mike, where you maybe start thinking about maybe, I don't know, stock substitution? Take some of that off the table and you can still play to the upside. Is that something you're considering for that client?
Possibly, but the problem, so the client has a low cost basis on it. So
taxes.
That's the other issue with which we have to weigh in on, is the fact that he has a low cost basis. And so I don't want him to take a tax hit because the state he is in is not friendly, along with the Fed not be, well, the federal tax rate's not too bad on long-term capital gains, but the state makes it a little bit, let's just say, less than pleasant for him to sell gains on stocks.
Taxes. What fun are these real world considerations, Uncle Mike? That's no fun. We don't work that.
It's really not.
We don't work that into the P&L diagram when we're talking about options. So, fascinating stuff out there. Do you subscribe to that? It has been certainly a hyperbolic move out there, listeners. You think it defies logic in Apple? It is a big move for a stock that has kind of languished until this buyback recently. So, yeah, fascinating stuff. A lot of head scratching stuff going on out there, and a lot of, as Kevin said, it's kind of a rinse and repeat when he comes on the show. Big tech leading the market forward, and that is the case again today. Let's see what kind of market we're having out there today outside of these individual names we're talking about. Let's go out to VIX first. VIX having a bit of a banger day, 662. I had a chance to do some digging. Looks like our combo friend against calls is back again out there in VIX land. So this is definitely the new hot trade out here in VIX land. We've seen it multiple times a week out here right now where someone's doing some sort of combo, usually buying call, selling put, and then maybe selling out of the money calls against it. Today, the big dog are the AUG 16 calls. That's 16 strike as part of that combo. But they do it on a ratio, too, I've noticed. 60,000 of the 16s have traded today versus 30,000 of the 16 puts. So as I recall, that ratio does line up with what we've seen in the past. So ratio combos against 60,000 of the AUG 40 calls. So all of that backing into 150,000 contracts right there. And then I think the SEP 47 halves in the past, they've done that again too. So that funky combo versus out of the money calls is going up again for some size. We touched on it before on vol views. Apparently someone's got a huge axe to grind on that, and they're up to it again. SPY 4.5 million today. So pretty much right where we expect it to be. The ADV is about 6.87 million out there. The S looking pretty hefty. 1.95 million on the tape. The ADV 2.83 million. Small caps, like we said, selling off hard today, so they're popping. 995 on the tape for small caps. The ADV 1.1 million out there. And the Q is a little bit north of where we expect them to be as well, 2.35 million. The ADV 3.25 million. So they certainly seem like they're on track to hit that. They've been kind of languishing volume-wise of late, so starting to catch up out there. And is it a banger single name day, listeners? The answer is that's about the right answer. Shrug the shoulders. 192,000. It's certainly not 360, 370, but it's also not 150. But it's not the most explosive day we've ever seen. So a lot of the action is definitely lining up in the major indices, with the exception of the top half of our top 10 listeners. There's some paper there. We'll get there in a second. The bottom half, not so much. We get to Mara, number 10, our old friend, just talking about them on the Crypto Rundown on Monday. 1983. Off about $0.50 right now. Good for 192,000 contracts. If you know Mara, that's actually pretty light for them. They were averaging around 400,000 not too long ago. That's come in a little bit now. I think it's 280, 290, but still, it's a pretty action-packed name out there. So if you're looking for a little crypto vol and some volume, you could do worse. Then Mara, number 10. Number 9, keeping it in the M names, it's Microsoft, 203 on the tape. Pretty much unched, right around 441 even right now. Good for 203,000 contracts on the tape. Apple overtaking Microsoft with this crazy hyperbolic rally out here. Will this persist? Will Microsoft fight its way back? Will NVIDIA trump them all? I guess we'll find out. Number 8, a newcomer to our top 10. I haven't talked about this one in a while. Also a funky ticker out here. This is Broadcom. When was the last time we talked about Broadcom, listeners? Ticker symbol AVGO. Gotta love that. They've made some acquisitions out there, including VMware, which I think has been a big driver for them. Up $181 today, or 12%, trading $1676.79. Why? Because they're joining the NVIDIA train, 10-for-1 stock split. We all know, second you announce that, it's like whispering AI into the ether. It's just bam. 12% rally in the stock out there today. So AVGO on our tape out there today, listeners. Number 8. Man, it's like everything old is new again. Number 7, SMCI. Another fun one. Super micro. You know it. You love it. Maybe you hate it. 866, almost 867, up 92 and a quarter, nearly 12% for them today as well. Because why not? Everybody else is popping 12%. Why not super micro as well for number 7, 339,000. So still fairly light volume all the way up to number 7. Number 6, now it's our A strip. We kick it off with AMD. 160, pretty much even, off about a quarter today. Good for 484,000 contracts and the number 6 spot. Number 5, keeping it in the A names, it's the Amazonians. 517, 183.65 is where they're trading, off 3 1/4. So they're coming for Amazon a little bit today. One of the reasons, obviously, that the Dow is languishing out there today. Number 4, getting memey, it's GameStop. 629. If you want some more insight into GameStop flow, stay tuned. We got some nuggets from the Flow Master to share with you on that. Should be fun. 629,000 contracts on the tape for number 4 today. Trading 27.08, up about $1.62 or 6.3%, or as it's known in the business now, pretty much a rounding error in GameStop. But either way, good for some decent paper, number 4. Then we get to the juggernauts, listeners. Number 3, it's the Fruit Company, 213 even now. Up a whopping $18.50 or 9.5% over this past week. I'm looking at this chart, and it did play out starting off exactly the way you would expect. Kicking off WWDC on Monday, stock was at 197. As the news started coming out, it did the buy the rumor, sell the fact thing that Apple always does. Sold off about 5 handles to 192. And it seemed like, all right, I think we even mentioned on the show on Monday, all right, here's the old Apple trade. Buy the rumor, sell the fact. They're clearly not liking what they're saying about AI. And then Tuesday, bam, just off to the races, got up to 204 on Tuesday, hung out there till it got up about 206.5 actually on Tuesday. Then the next leg of this parabolic move kicked off yesterday up to 220.20 before giving some of that back again. So just, I mean, this is a massive name doing this kind of move. This is not, you know, your GameStops of the world out here. So this is certainly an aberrant move, to say the least, for Apple. All that baking into 1 3/4 million contracts on the tape. It's been a while since we've seen Apple at this kind of volume, but also it's been a long time, if ever, since we've seen Apple make a move like this. So this is just, I think technical term is bonkers, listeners. Number 2, right behind it, we got Tesla, 184 even, up nearly $7. Looks like Musk getting his mega payout, $56 billion. I guess the shareholders like that, up about nearly $7 today. Good for 2 1/4 million contracts. And you know what number 1 is. Is this the new normal for us in the options market? Certainly seems like it, listeners. NVIDIA post-split just on another level, 4.03 million. So it's crushing Apple, which is knocking the cover off the ball. It's crushing Tesla, which is fully 1 million contracts north of where it normally is. And NVIDIA is still blowing the doors off both of them. In fact, it equals pretty much the two of them combined. 4.03 million out there, 128 and a third, up 315 or $2.50, 2.5%, excuse me, or in the old days, $31. So yeah, just crazy town, I believe, is the word for what we're all living through together. We had some earnings this week: Oracle, Vera Bradley, Broadcom, Dave & Buster's. Today we have Adobe and the aforementioned Broadcom out there. So intriguing stuff. If you want to sink your teeth into that, listeners, head on over to theoptionsinsider.com. Click on the Options News and Articles tab, because we can have a whole mess of fun out there, listeners, including the season. Right now, I'll give you an update on the season. 117, that's where we're standing right now, 117%. That means if everything moved exactly as much as was priced into its straddle, that would be about 100%. So clearly we are outpacing that. We have been doing so for some time, hence our long-term average being around 109%. What a sea change that is from the post-pandemic days when we were crunching these numbers, listeners, and we were hanging out mid-70s, maybe low 80s%. Nobody gave a crap about earnings. No, doesn't matter what you said. It had no impact on your earnings vol. These days, obviously a very different story, and outperformance is the name of the game. If you want to see exactly how much, head on over to the website. As we head on over into our next segment, it is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's get weird. Let's get wild. Let's dive on into the odd block. This is usually on the Thursday show where I toss it to the Flow Master. Let him regale us with what trades caught his eye this week. But we got Mr. Kevin sitting in the hot seat this week, even though I do believe he's sitting on some hot data in a name you folks may want to know about. Something, I don't know, GameStop? You may have heard of it, listeners out there. But Henry has been diligently crunching the numbers for us, even in his absence. Mr. Kevin, sir, what's catching your eye and what's catching the eye of the Flow Master out there in GameStop these days, sir?
Yeah, as you could see, the Roaring Kitty was right back into it last week. So what we're seeing is call open interest in GME nearly tripled from 500,000 to 1,500,000 between May 19th and June 11th. Put open interest was also a big gainer, but it's still half of what the call open interest is. The June 14th, 20th calls were probably the largest open interest gainer. Went from 15,000 to 170,000 contracts. So that was the one that they were picking on quite heavily. And if we look back, I mean, it's kind of looking like these went from about $6 to $27, while the shares went from 22 to 46. So a massive winner. The reports that we were getting from the media was like, Keith Gill, he was holding 120,000 of those from around the $5 level. So he spent $60 million on the trade. Looks like if it was a $265 million profit, if it was held. Hard to see where that was closed out. But it does look like it was closed at around 765. So maybe just a couple dollar gain on it, but still nonetheless, about $24 million in gains. So hard to say exactly what worked out there in terms of P&L, but nonetheless, GME heated up again. Was heavily on the social media feeds. Very much the story stock again. And then on top of it, they obviously did a secondary alongside of it. So it's very interesting how they take advantage of these short squeezes and then almost try to reposition the company into something legit. So we'll see how that works out. But that's kind of where that's settled there on the GME story.
Yeah, that is fascinating. You're right to see these companies that could really use a lifeline getting one through this otherwise and taking advantage of it, being savvy enough to take advantage of it now, because if you miss this is literally a gift from the gods. If you miss it, you're missing your chance to really perhaps turn around your company. So take advantage of it. Also interesting, we've been profiling a lot of interesting trades on this show and on the Options Oddity show. There does seem to be a trend of people not really closing them out. And you could certainly argue that is the case here as well, that they got up to about $27. That was the high for these things on June 5th. They ended up closing them about a week later for prices, as you mentioned, around $765 average price. So seems like about $265. Again, everyone will take that. That's not a bad return on a roughly $5 outlay, but also a far cry from the roughly $27 that these calls were worth at one point. Now, as Henry even points out, if they're gamma scalping, and you'd have to imagine either Roaring Kitty or, as a lot of the theorists conjecture out there, whoever is behind him, is questionable whether he has the bankroll to shell out $60 million for these calls straight up. Also, that's a heck of an outlay to just buy for some short-dated calls in GameStop. If they were savvy enough to hedge the gamma, in which case they could have done substantially better. But either way, the call side, which we can easily track, looks like it was closed out for roughly $2 and change. Again, close to 50%, so not bad, but also nowhere near the over 5x it was at one point out there. So you can take some solace in that, listeners, that maybe not everybody can pick the top out there. And also some people who are arguing maybe, again, for the pump and dump, maybe this argues against that a little bit, because it doesn't seem like he dumped, at least not at the most optimal level out there, which is it's just kind of interesting. Mr. Rock Lobster, any thoughts on this intriguing flow in GameStop? Then I do believe you and the Meatball were looking at some YOLO trades out there in Apple. What's catching your eye, sir?
Well, I mean, the GameStop stuff is, what are you going to say to it? It's just, I mean, it happened once, and and folks think it's going to happen again. I know the Roaring Kitty guy, whatever. I don't look at it too much, just because it's kind of like a carnival sideshow to me. I don't want it to distract me too much from just trying to make kind of normal, boring money in other places. And that basically is, I'm sure. Anyway, so I don't follow it too much. The Apple was a little more surprising because, we do look at Apple volume because I think it does give you kind of a sense of the broader market. When they're coming for Apple calls, Apple is not a normal, what I would call a YOLO style trade, but they trade 100,000. I think they put up 100,000, 215, 220 call spreads in Apple for tomorrow. Now that's a pretty good chunk of change. It also, I laugh because when I started, this would have been really high volume for the entire P-Coast floor, just this trade, one trade. I kind of date myself a little bit, but yeah. So the June 14, 215, 220. It looks like a spread going up for kind of huge size, but either way, Apple is not the stock that is normally what I would call, YOLO. So it's piece volume. Maybe it's not a block for sure. So probably a lot of retail jumping in. Maybe somebody recommended it as a cheap flyer because the stock did trade as high as 220. So again, you're seeing out of the money call buying in Apple. You're seeing inverted skew on the upside. So, the liquidity provider adjusts pretty fast to all of the call buying. So I find it interesting to say the least right now.
1 week, $5 out of the money / near at the money call buy in Apple. You're right. You don't see, we have seen size near dated flow before, but
it's actually 1 day.
Oh, you're right. That's 1 day. You're right. Oh, yeah. You're right. I'm thinking, in my mind, June expiration is still like a week and change away, but you're right. It is 1 day. You're right. Ooh, yeah. I guess you do only live once when it comes to Apple, Mr. Rock Lobster.
Yes.
Oh, interesting stuff. As we keep rolling, let's get out of here with one more here. Let's go back to a frequent offender, one of our most frequent offenders, and dare I say it, perhaps our longest running right streak here on the Odd Block and on Options Oddities. I'm hard pressed. Maybe the next time the Flowmaster's on, I'll have them crunch the numbers for us in terms of how much this customer has actually made, because they're definitely one of the longest running trades I can remember. We've been talking about them for at least a couple of years now. And I'm also hard pressed to think about a time when they got the trade wrong, when they didn't skate on these puts. What am I talking about? I'm talking about our old friend, the Bumble Put Writer. They are back for size yet again. You don't need me to regale the saga that is the Bumble Put Writer. It's been pretty much just a rote thing at this point, every month, selling out of the money puts, doing it for size, getting a decent chunk of premium somewhere between 13, 14 cents all the way up to maybe about 25 cents. And that is the case again today. Bumble right now, 10.64, selling off 28 cents or about 2.61%. On the year, it's gone from 17.5 bucks down to pretty much where it is right now. The actual low came, looks like a month and change ago at 9.83. So they have rebounded off their lows a little bit. But you look at this chart and say, this is a terrible name to be writing puts in, because it's done nothing but go down about 40% this year. And yet they've managed to skate just about every time. And they're back again, listeners, this morning. 25,000 of the 9 puts this time. So $1.64 out of the money puts. They sold them for 23.5 cents, which is actually a decent amount of premium for them. I've seen them get less out there in the past. That's a 53 vol if you are wondering. The stock was about a dime higher when they did it, 10.74. So yeah, once again, back to the races. I'll have to go and add up all of the crazy size that is open out there in Bumble right now, listeners. Spoiler alert. It is a lot, and the lion's share of it does seem to be this customer, or perhaps others. Looks like right now the 9 puts have 57,000 contracts open on them in Bumble. The 10 puts in July, 45,000. The 10 half puts expiring on the 28th, 42,000. So there are some size puts. You got to go all the way down to number 5 in the terms of top open interest to find a call. And that is a distant number 5. Only 3,400 of the Jan 25s. And spoiler alert, those are not looking great. Kevin, I talked about this with Henry a lot before. He's actually profiled some of these puts on the show as well. Have you noticed this ongoing saga of these size bumble put rights and the fact that they seem to be right just about every time? What are your thoughts, sir?
You know what? To be honest, this is kind of the first I'm looking at Bumble. Yeah, I mean, I'd agree that the chart doesn't bode well for a put seller, but they're so far out of the money. I guess that's how it's kind of working out. I mean, to me, if you're looking to pick up a dime or 15 cents or 20 cents that hard, I don't know if this is the name I would choose it unless it's a name I know really well. So maybe the seller has some sort of other, motivation here, where they are clearly okay with owning this thing at 9. I don't know if there's a structured product out there or if there's any other, if there's a convert or anything, but there could be something why this 9 strike is getting picked on. I can't imagine this guy just needs 20 cents that bad, but I mean, there's got to be something else going on here.
Yeah, Henry has speculated that it is someone who's willing to potentially take over a big chunk of the company if they do get put to. Because
it's an activist or something.
It's a sizable trade. Yeah, I'm looking.
It's free money to whoever's doing it because they know that even if it gets there, they're going along it anyway. So.
And they have collected a lot of free money. Might be an interesting research project to try to figure out exactly how much premium they have harvested. They've harvested a good chunk of the value of the stock at this point now, I would think. Looking back at it, Henry talked about it just a few weeks ago on the May 23rd show. We also talked about it on the May 10th episode of Options Oddities, myself and the Rock Lobster. We talked about it on the April 5th episode of Options Oddities, and then back on the January 18th episode of this very show. And I'm sure if we wanted to do more, we could have talked about it multiple times in between. So this is a very active trade, and track record-wise, listeners, I'm hard-pressed to think of another one that is better. Mr. Rock Lobster, can you think of a time that this Bumble person has been bit on their put, sir?
Well, it just goes to show you that love springs eternal on Bumble. Love for these puts. I couldn't help myself. No, I can't. I think this seems to have been always a good put sale. They actually seem like they collect some decent premium. This is like $500,000 for the primo. A little bit better than your girlfriend's Ferrari.
Which your girlfriend can then use that money and go on Bumble to find some real love.
And find a new girlfriend.
Exactly. So upsell you once she gets your cash from these puts that you're selling. And you're right, 23 cents is a little bit more than they've gotten in the past. So not a bad do, as they say, if you're looking for a put right and you like a little bit of Bumble action. Maybe this is your Huckleberry as we keep on rolling and go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, let's get to a little bit of Around the Block action. Before we get to everyone's thoughts, what they're keeping an eye on for the rest of the week, thankfully, we have exhausted most of the near-dated numbers. We had a hot number week. We can take a little bit of a break now. But we asked you last week on the show, listeners, a little bit of fun stock picking. Palantir or Robinhood, both trading around $21 at the time. Which one would you rather buy? 47.8% of you chose Palantir. 30.4% chose Hood. 15.2% said, I'm out on both. I'd rather trade Vol. 6.5% said you're just out on both altogether. So there you go, listeners. You agree? You like Palantir better? Do you agree with our audience out there? This week we asked you the question du jour, which is, should the Fed cut rates this week? Yes or no? This one has pretty much expired now, as you would expect, because the answer is in. And you folks pretty much agreed with what the Fed did. Nearly 70%, 69.6% said no. 30.4% of you said yes. So 70% of our audience breaking with Uncle Mike, who thinks they should have cut rates. I think a full point. He thought maybe a 1.5 out there. I will say, heading into this announcement, we talk about the Fed Watch a lot on our TWIFO show. Probably will again maybe later today. I don't think I've ever seen it this biased to one outcome. I think it was 99.4% probability they were pricing in of the Fed sitting on their hands, which is exactly what they did. Usually you see at least a couple of percent for them to do something. Nope. It was about 0.6% probability of a 25 basis point cut. So that number on Friday really took all of the wind out of the sails for the rate cut this week, and the market was pricing it accordingly. Seems like you folks out there agree. All right, Mr. Uncle Mike, I know you vehemently disagree with the Fed. You want, I think maybe, is it 2 points? You want a full 2-point cut. And then what are you keeping an eye on for the weekend until our next show on Monday, sir?
I want to go back to the 0.25 to nothing, I think it was. That seems like so long ago now. Remember how we had like no interest rates for like 10 years? And
yes.
Then
Everyone had forgotten about Roe.
No doubt about it. So what I'm wanted to see if we can make some new all-time highs in the S&P. That seems to be what I'm always watching right now. And then watching, of course, the fruit company, seeing what is happening there, seeing if we can take another leg up with this. It would definitely not surprise me in the least if we did. And let's watch NVIDIA too. What the heck? It's entertaining to watch. We have some exposure to it, not a ton, but we do have exposure to it. But let's just watch it at least. So that's what I'm keeping an eye on.
And Mike, you can admit to our audience, that was you who bought that 215, 220 vertical of 1 day to go. I know 130,000 is a little small size for you, but you can admit it.
If my compliance wasn't listening, I would have a lot of good jokes and witty remarks to that right now, but I'm just going to have to say no comment.
No comment from Uncle Mike, but yes, read between the lines, listeners. 130,000, that's small size for Uncle Mike, but maybe a little bit of a nibble over there. Mr. Rock Lobster, sir, what are you keeping an eye on until the Monday episode, sir?
Till the Monday episode, I want to see if we can get to. We're at 1.5% away from 5,500 SPX, which I think in October people were laughing that we could get there. But I mean, if we had a little bit more market participation with, let's say, the other stocks, I think we could get somewhere. So I'm finding this. I would like to see if we could get a little bit of a lift here. We just had that last last bond auction. We've had all our producer prices, all the news. Earnings are good. AVGO just is up $200 today. Like, what the heck? Let's get all these other stocks going. But it's just, I think, anyway, I like to see if we could do that. But as of today, it looks like we're kind of stalling here around 5,400, a little above 5,400. So it's mostly just seeing if the rest of the market can participate like all the AI stocks have been kind of holding things up.
You're right. It is crazy to think just around Halloween, we were threatening 4,100 in the other direction. We were threatening to break through.
Yeah.
Just crazy town ever since Halloween, sir. Kevin, the last word is yours, sir. What are you keeping an eye on until your next appearance on the show, sir?
Right. That could be, we don't know when that is, but for the next week, there's not a lot on the calendar. The earnings calendar is pretty light. So we're kind of heading into those summer doldrums. The 4th of July week's coming up. We got Wednesday off next week, which is Juneteenth. So a dull market is on the front here, and I don't think you want to short one of those. So, for me, it looks like, barring any, geopolitical, it seems like the trend continues. I'd like to see some of these other big cap tech maybe jump back in, whether it's AMD, Dell, they've come off and they certainly could turn back up. Tesla's waking up again with on Elon's pay package, news here. So, just again, I'm always looking for the torch to be passed from from one leader to the next. So those are some of the names I'm watching.
All right, everybody. That music means we have come to the end of another fun journey through the world of all things options. Don't worry if you're hanging out in the live, if you're listening on demand. If you want more content in your lives, I'll be coming at you in a little bit with all things futures options on This Week in Futures Options. So stay tuned for that coming at you in a little bit if you're listening on demand. Just hit next on your device of choice. TWIFO should be waiting there for you after you finish this show. And let's go around the horn. Let's see what everyone has up their sleeves that may intrigue our listeners. Kevin, we'll start with you. If our listeners want to go out there and do some of their own analysis in names like GameStop or NVIDIA or Apple, where should they go? What should they do, Kevin?
Please go to Cboe.com/RMA, where you can see all the different offerings from risk and analytics to execution platforms. It's all one-stop shop there. So check it out, Cboe.com/RMA.
There you go, Cboe.com/RMA. Head on over there, listeners. Keep the Flow Master and Kevin, keep them in business over there. Keep Kevin in delicious beverages over there. Cboe.com/RMA, the place to go to begin your journey for your own flow analysis out there. And Mr. Uncle Mike, sir, if folks want to write to you to discuss Apple, covered calls, or anything else, where should they go? What should they do?
Follow me on Twitter at Mike Tosaw, Tosaw, or you can check out my website, stcharleswealth.com. If you're looking to have a conversation with me, set up an appointment. And I will be doing another webinar next Tuesday night. The information will be on my Twitter page, so follow me for more info.
Follow him indeed, listeners, at Mike Tosaw, Tosaw, all one word, on the old X. Or indeed, hit him up, stcharleswealth.com. And last but not least, Mr. Rock Lobster, sir, where should folks go if they want more Rock Lobster goodness in their lives?
Yeah, go to optionpit.com. You can check out my weekly profit cycles if you want to learn a non-correlated trading strategy, SpyVix. Also, Option Pit University, which has, I believe, the best option education content. You actually learn how to trade these option things. 888-TRADE-01, 10% off anybody that calls in and say you heard this here show. You get something for nothing.
OptionPit.com if you want to learn more out there. That is going to do it for us on the show today. Back again in a little bit for Twyfa. What's going to make it on the show this week? Is it going to be metals? Is it going to be FX? Is it going to be dairy? You never know. You got to tune into the show each week. I don't even know yet, listeners. We have to crunch the numbers to find out. And then, of course, coming back tomorrow, right back in your face with some volatility views goodness at noon Central, followed afterward by a whole bunch of options oddities. It's going to be more bumble puts. Who knows? Got to tune into that show to find out. TheOptionsInsider.com/pro is the place to go to get access to that. Then we're back again on Monday, another episode of The Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.